Asian REITs today has grown considerably, and REITs comprise 24% of listed real estate in Asia, and it is still growing. 37% of the listed real estate in Singapore is in the form of REITs, the highest among the Asian countries. And we have a very short history. REITs was first introduced only in 2002. The next biggest REIT market is Japan with 31%. Australia has the longest REIT history. The first REIT in Australia was introduced in 1971. And today it has a total of 60 REITs with a market capitalization of US 68.4 billion, comprising 4.7% of the total market cap. While Japan is next in terms of market cap and number of REITs, 45.6 billion and 35 REITs, it's still small in comparison to the total market cap, only 1.4%. Singapore, on the other hand, has 24 REITs within a very short history, as I mentioned, of only 9 years, with a market cap of 29.3 billion, constituting 4.7% of the total market cap. The other Asian REITs are in Korea, in Hong Kong, Malaysia, and Taiwan. What's missing in this region is still, is India and China. A very rough estimate of India's commercial real estate stock is about 200 billion US dollars. But not all real estate are REITable or of REIT quality, and we'll talk about that later. Performance of REITs vary by country and by sector, much like the real estate itself. However, what is useful to note is that the dividend yields from REITs are much higher than the risk-free rates in each country. For example, Singapore's REITs offer a dividend yield of average 6.2% versus 2.3% government bond, therefore providing a very attractive premium of almost 4%. Compared to fixed deposit rates, the yield gap is even larger. Well, the REIT journey takes time and very careful policy planning. And Singapore's journey is an example of one where policies continue to be fine-tuned in line with market demand and changes. As part of Singapore's strategy to develop a strong, vibrant financial capital market, MAS has come out with highly favorable and innovative policies to encourage the listing of REITs in the Singapore Stock Exchange. Incentives such as waiver of stamp duty, lower tax rates for foreign investors, tax exemption for individuals have been granted, but these are also balanced with regulations on the REIT managers and the developers, such as gearing limits, the extent of development activities, which is higher risk, of course, that REITs can undertake so that the interests of investors are protected. Ascendas took the opportunity of the favorable REIT regime to list Singapore's first business space REIT, the Ascendas REIT. From 8 properties, A-REIT has grown to 93 properties. From about $600 million, it's now grown to $4.5 billion. A compounded annual growth rate of about 41.8% in terms of income for distribution, and a compounded annual growth rate of 7.1% in terms of distribution per date. I was told that investors from day one would have received a total return of about 276% to date. So it's been a good investment, it's been a good investment product. But what are the ingredients for a successful REIT market to take place? First, we believe that there must be market acceptance and interest by investors in that particular class of assets in that particular country. Second, the real estate market must have a certain level of maturity and sufficient investment-grade assets that would be of attraction to investors. Thirdly, a favorable REIT regime, regulatory framework, and sufficient real estate expertise to undertake the asset management as well as capital management functions. But what I think is hugely important is the availability of information to enable investors to make informed decisions. So based on this criteria, is India ready for REITs? I believe that India's stock of stable income-producing assets is largely limited to IT parks and to some extent, a small extent, office buildings. An even greater hurdle, I believe, is the readiness of the owners of these assets to sell them at a price that commensurates with the yield that investors want, particularly foreign investors who, after factoring in the risks associated with the assets in the country, would be prepared to pay. This is demonstrated by today a rather low volume of transaction of investment-grade real estates, only US 188 million in the first quarter of this year, compared to the volume in Singapore of $1.6 billion worth of investment transactions. It's also estimated that Singapore's commercial real estate is about $500 billion worth, India of 200 billion. I think a small percentage is of the quality that can be REITed. India still lacks a regulatory framework that encourages securitization of assets, so much work needs to be done to align also the different tax treatments among states and the central. Real estate expertise is still not as readily available nor complete. For example, for professionals such as valuers or quantity surveyors are still very scarce in India. But the biggest obstacle in my mind is that of information, of clear titles, of supply and demand information, of price data. So just to put the assessment, graphically, and comparing India with Singapore, as well as with China, the other big market in Asia that still has yet to have a REIT regime, India has still some way to go before it would be ready for REITs within its jurisdiction. And that's where Singapore comes in to act as a bridge for investors to assess India real estate without having to step physically into India. The favorable REIT regime in Singapore has opened the door for foreign assets to be listed in Singapore. Today, Singapore has four foreign real estate REITs that are listed on the SGX. By leveraging on the Singapore REIT and Business Trust framework, Indian real estates can be made available to foreign investors in Singapore. The Ascendas India Trust is one example. It is the first business trust of Indian real estate to be listed in Singapore, in Asia in fact. Listed in 2007, seeded by the IT parks that Ascendas developed or acquired in India, in Bangalore, Hyderabad and Chennai. Today it has a portfolio worth about close to $1 billion. AI Trust follows very closely the REIT guidelines as issued by MAS, with the exception of a slightly higher development component, 20% versus 10%, because of the higher development opportunities in India versus the more limited opportunities in acquiring matured investment-grade assets. But nonetheless, the growth strategies for AI Trust entails both development as well as acquisition. And this is the portfolio of AI Trust in India today. Compared to the trading performance of other Indian real estate counters, the Bombay Real Estate Sensex Index, AI Trust has been trading and continues to trade at a premium to real estate stocks in India. So as a conclusion, I believe that India's real estate industry will mature over time. The conditions for REITs to take off will improve, and with the promotion of REITs, the industry will become more transparent, more professional, which in turn will further develop a robust and vibrant real estate market to support the economic growth of India and widen the range of investment opportunities for investors interested in the Indian market. But in the meantime, the avenue of listing in an overseas market like Singapore is open if the assets are of investment grade with a stable stream of income and is well managed. And this is one example of how Singapore can be a springboard for South Asia. Thank you.
Thank you very much, Siak Ching. That was excellent. I think, folks, you need to go to the IT park in Bangalore, what Ascendas has built, to believe what she has done there. That's excellent. I go there very often, and I think it's a wonderful park that you have built and created a mini Singapore in India.